Hey, what's up guys? John here. Now, I've been pretty bearish on the economy and the market for about a year. Now, I was probably a little early. Back then everyone else was extremely bullish, and stocks, they were just so bullish on everything. There's only one direction that an investment goes up, and it's just up, 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 up. That's where it goes, right? I was always saying, what? The smartest people in the world, they're selling stock. Why would they sell stock right now if they could take out a loan against their stock for 1.5% interest? Hold the stock, then take 60% of their portfolio in cash, go invest that cash and hold the stock. Why would they do it? They could multiply their wealth better doing that. And the reason being is because they'd get margin called, meaning if the stock drops below a certain threshold, they'd be forced to liquidate, to sell, to pay back the lender who lent them the money. That's why they wouldn't do it. And then I said that, coupled with the fact that we're transitioning away from fossil fuels, meaning all utility bills are going to get more expensive, gas is going to get much more expensive. Food costs, everything's going to get more expensive. Meanwhile, wages are flat. And then we look at household consumer debt. Debt's through the roof. Everyone's highly leveraged. There's no way that this does not end in a catastrophe. And then all the while, during this entire situation, utility bills, student loans, rent, all these things are put in place to give a false sense of security on the economy. So my belief was there's going to be a time when they can't do this anymore. And they're going to have to increase interest rates. When all this happens, we're going to see chaos in the markets. That's what I believe. And when I was saying this about a year ago, so many people thought that, I was just completely wrong and that I was selling fear. But now, looking at a lot of the wealthiest people, they're coming out right, saying it. Some big names. For example, Michael Burry, he's been pretty bearish alongside, me with some of my predictions. Michael Burry, he's been saying that, he warned in late May that falling stocks and slowing house sales reminded him of a housing bubble bursting in an aviation disaster. As I said, 2008, it's like watching a plane crash. The investor, the Big Short famed, also pounded the inflation alarm, noting rising costs are eroding the purchasing power of the US dollar. We all see it every day in prices of everything. The Scion asset manager boss also emphasized that Americans are saving less, borrowing more, and spending the cash they have stashed during the pandemic. He asserted the U.S. economy is on borrowed time as a result, and the consumer spending and corporate earnings are poised to tumble. Now, one fascinating thing, he said that borrowing money, speaking of borrowing money and taking money that isn't ours, look at stimulus. Look at all the money that was put into the system. Think about where this went. It went back into the stock market in most cases. And then when it was back in the stock market, then what ultimately happened? Well, the corporations had more money. They were able to pay their employees more. They were able to invest in infrastructure. They were able to expand and grow, build out their own shipping and distribution. All of these things to build out a further competitive advantage. Whereas small businesses that were deemed non-essential, they didn't have that flexibility. So when I looked at this information, it was just, there's no way that I'm wrong on this. There's no way that this doesn't happen, because this is not what economies do for a long period of time. They do this maybe short term like we've experienced, but it's not going to be sustainable. The looming consumer recession and more earnings trouble. Burry diagnosed the great speculative bubble of all time and all things in June of 2021 and warned buyers and meme stock cryptocurrencies were heading for a mother of all crashes. And this man, Jeremy Grantham, is a multi-billionaire. He predicted stocks would tumble further. And he went on to say that this is because the market historian also flagged labor shortfalls, right? Shortage in resources such as food and metals, and the ongoing transition from fossil fuels to clean energy and inflationary drivers, right? All in all, we face some very intractable inflationary problems. We have an average American making about $40,000 a year, and you factor all these things into the equation. There's just, there's going to be this massive wealth transfer that is unfolding right now. David Einhorn, he argued that the Federal Reserve lacks the tools to curb inflation during 2021. Well, of course they do. And I've been kind of talking about this for a while. Sure, they can damper consumer spending. They can increase rates to where it's more expensive to borrow money. But gas prices are still going to be going up. And we're going to be paying for all of our everyday expenses through these elevated gas prices. So how can they maintain inflation and continue everything at a basic level to where people could survive, right? They're not going to be able to tame inflation as easy as they anticipate. The Fed's bluffing. I agree. Einhorn said the Fed's gradual interest rate hikes weren't sufficient to stop prices rising. He compared the approach to trying to clear your snow-covered driveway with an ice cream scooper. The hedge fund manager added that it might be wise to own some gold in case raging inflation erodes the buying power of currencies and weighs on other assets. I believe gold and precious metals will likely do pretty well over the coming few years, mainly because it's not just America that's dealing with this inflationary problem. You look at China, India, Saudi Arabia, you look at other countries that have access to affordable oil, they're going to be able to bring their costs down, build out a good competitive advantage over America. But what they're also doing is you're seeing these countries and governments buying large blocks of gold and also diversifying outside of the dollar. They're doing a lot of different things, and the dollar, I think, is slowly getting eroded. And we're seeing that. It's been the history of all fiat currencies. There's been so many fiat currencies, not many of them have stood the test of time. Stanley Druckenmiller said, and this man, he partnered up with George Soros, and they essentially bankrupted the Bank of England about 20, 30 years ago, made $1 billion overnight. He believed, this was about 6 months ago, he said that he believes that the US dollar will no longer be the reserve currency by 2030, in about a decade, so about 2030, right? Highly probable a bear market would continue for a while, and predicts there would be a recession next year during a 2022 saw an investment conference this week. The Dunst family office firm pointed out that the inflation has, the Dunst family office firm pointed out that inflation above 5% has never been reined in without causing a recession. According to CNBC, he argued that the scale of asset bubble, the Russian-Ukraine conflict, and China's zero-COVID policy raised the odds of an economic downturn. Druckenmiller also, bemoaned the hype of speculation on financial markets during the pandemic, added that many people were set to lose a lot of money on the risky assets that they purchased. However, billionaire investor advised against betting heavily on further declines. I've lived through enough bear markets that if you get aggressive in a bear market on a short side, you can get your head ripped off in a rally. David Rubenstein, he also has a podcast, and he speaks with some of the wealthiest people on the planet, and they kind of share their 2 cents on where they see the economy. He's the co-founder of Carlyle, one of the largest private equity firms in the planet. He said that he sees enormous ebullience in markets. Rising interest rates would drive the U.S. economy into a recession. People are going to make a lot of money buying at these prices. Tom Siebel, he says he predicts that markets will be a little rocky for the next couple of years during the Robert W. Baird conference this week. And the tech billionaire, and artificial intelligence, the 4 horsemen of the apocalypse are all happening at the same time, he said. Pestilence, famine, war, and death, we got them all, he added, referring to the pandemic, Russia's invasion of Ukraine, and signs of recession in the U.S. and Europe. The enterprise software pioneer also described estimated U.S. inflation of 8% laughable given how much food, fuel, and rents have soared. Moreover, he said recent hiring freezes among big tech companies reminded him of the months before the dot-com crash and the financial crisis. Siebel also made a prediction about the new wave of crypto workers in the pandemic, who he described as people who went home to work from their PJs and get paid in Bitcoin. He suggested the plunging value of their stock options and investments, coupled with surging rent and grocery costs, would force them back into conventional jobs. Dawn Fitzpatrick, so this lady, she works under George Soros. And so she did an interview with the co-founder of Carlyle, David Rubenstein. And she said that the bottom line is a recession's inevitable. Dawn Fitzpatrick, the CEO of CIO Soros Fund Management, she said it's a matter of when, and the markets are pricing it in fairly soon. Fitzpatrick asserted that the U.S. consumers are in good shape, so a recession could arrive later than markets expect. She was saying this, I believe, based on if gas prices stay the same, if things stay the same. But what we're seeing is gas prices continue to rise. Every single week it's getting more and more expensive. And so if they're pulling the stimulus out and interest rates are going up and everything's just getting more expensive, it's going to be a slow erosion, right? It's going to be a very, very slow erosion. But when I say slow, it might be 90 days. It might be 6 months. We're going to start to see this confidence getting sucked out of the market. We're already kind of seeing it in a small way in the stock market right now. Howard Marks underlined the extraordinary nature of the current confluence of the market events in recent Bloomberg surveillance interview. These conditions are not reminiscent of anything that I have lived through, he said, pointing to the pandemic, Russia's invasion, America's economic rivalry with China, and historically low interest rates. The billionaire investor of Oaktree Capital Management boss warned an economic downturn would reveal that investors overextended themselves or racked up too much debt during the market boom. Buffett always puts it best: when the tide goes out, we find out who is swimming without a bathing suit. Marx said, when economic and financial conditions become more difficult, we find out who made good credit decisions and who made the bad ones. We will see. Right? Robert Herjavec from Shark Tank, he said that there's a lot of FUD in the market, Herjavec explained, using an acronym for FEAR, right? So Kevin O'Leary, he's saying the same thing. Shark Tank investor Kevin O'Leary, fund boss, said the 30-odd private companies in his portfolio are enjoying the sales boom of unprecedented cash flows. O'Leary added that he expects inoculated recessions because consumers still have stimulus money they haven't been able to spend due to supply chain disruptions. So I believe we're going to start to see this whole thing come down. It's interesting to see, a lot of, big names coming out saying the same thing. CEO of Chase Bank came out. He was saying that he sees a hurricane in front of us. I think we're seeing some interesting changes in the economy. This is a great time to have amazing credit, 740 and above. You're going to want 740 credit and above. The reason I say this is when we step into a contraction and you go to apply for a home loan or a mortgage or an auto loan, these lenders are only going to want to deal with the best borrowers on paper. And why do I say that? It's because they took a lot of risk the last year or two, and they're probably writing off a lot of bad loans, and they don't want to do that going forward. So they're going to want to lend to people that have great credit, strong income, multiple income streams would be great. Knowing where you're going to invest and having a great plan and strategy around it, all can be found at cashnow.video. Drop your comments below on what you think about this. And subscribe. You're also subscribe to my second YouTube channel. It's going to be an interactive show and a podcast coming out this upcoming week. And LinkedIn, Twitter, Instagram, TikTok, everything is in the banner. And catch you guys in the next video.